On tonight's Hot Topic Tuesday, we are in tax season and there are a lot of changes. Joining me now is Brian Hinkle, managing partner at Sigma Legal Advisors. Thanks for being here. I know it's a busy time for you, but I appreciate you taking the time to share with our viewers what is new this year. So what are those tax changes? Let's start with overtime.
It's a great question. Thanks for having me, Val. Overtime is going to be there are new deductions for it. For single filers, $12,500 max, and for married filing jointly up to $25,000 max. It's a deduction, not a credit, so it reduces your taxable income. It's not a reduction to the actual tax that you owe. It's for classic overtime, time and a half type pay that you're going to be receiving. And it still allows you to claim the standard deduction, so you don't have to itemize to take it. It is going to reduce your federal income tax, but not going to reduce your state or local income tax, and it will not reduce your payroll tax either, so you still owe Social Security and Medicare.
So what about tips? We heard a lot about tips. What's the deal with that?
Same type of situation. It's a $25,000 deduction that you get to take up to maximum. There are phase outs too. I should mention the phase outs. The phase outs do occur. It's $100,000 and $300,000 for when you get into the, or $150,000 and $300,000 when you get into the higher net. When the higher earners don't get as much of a deduction, it starts to phase out. So the $25,000 deduction for tips is a little bit different than the overtime insofar as the tips have to be gratuitous, they have to be reported to your employer, and they can't be for mandatory service charges, things like that. And again, both of these will expire in 2028, so unless they're extended.
Okay, good to know. What about new auto loan tax? That's a deduction as well, but there's caveats to that, correct?
Same type of caveats. It's going to run through 2028 also. It only applies to new vehicle purchases, not leases, and it has to be primarily finished in the United States, and it has to be less than 14,000 pounds. It has to be for personal use, not business. And your family member can't loan you money and then you take the deduction, and you can't loan money from a business that you own to yourself to buy the vehicle. It is up to $10,000. There are phase outs on that at $100,000 and $200,000 for single and married filing jointly also.
And what about the child tax credit? That got a little bump, right?
Correct, about $200. It is a tax credit for children that are your dependents. They live with you half the year. They are, you claim them as a dependent on your tax return. You get to take that deduction against, and that's a credit, I'm sorry, against your income. So that does reduce your actual overall tax liability as opposed to, again, the other ones we talked about were deductions.
There's so much going on, and there's even more than that. We're going to thank you for being here, first of all. And we're going to have Hot Topic Plus, and you're going to give a whole other group of deductions and things that people need to know. So you want to catch that on our ABC 27 News Plus app, and that should be on tomorrow morning. And again, thanks for being here.
Hi, I'm Eric Finkenbinder from ABC 27. We're excited to announce the new ABC 27 News Plus app. Live stream newscasts or watch content on demand. This is different than the ABC 27 app on your smartphone. You can check this out at home, and it's very easy to use. With a Fire Stick, go to the home page, scroll down to search. From there, enter ABC 27. Move over to the apps, and there we are. Click the icon and install. It's just that easy.